An analysis of the fate of the terrifying markets in less than 5 minutes. After companies started recovering from the corona crisis in terms of returns and profits, they may return again to the 0 point, and the horrific stock market decline recently may be evidence of the beginning of a setback, especially with the terrifying inflation figures for February 2022, in which inflation is estimated at about 7.9%. This is a record number compared to the past 40 years, meaning that $100 previously is worth only $92 today, so cash was one of the worst investments in the past period. Therefore, we also see the determination of the U.S. Federal Reserve to raise interest rates in an attempt to avoid inflation. However, the inflation figures have not only harmed individuals in terms of inflation, but will also affect companies in a very large way, as the increase in the rate of inflation translates into an increase in the price of products and thus an increase in companies' costs to manufacture a product, which will reduce the profitability of the company unless it raises its prices to consumers, but the consumer is unable to pay more. As you know, dear viewer, the decline in returns may lead, in one way or another, to a decline in the financial markets. This hyperinflation, if not curbed, will eventually lead to the collapse of the markets. As a sharp rise in inflation preceded periods of economic recession historically, as economist Chris Robb said. It is true that all this talk is dangerous, but there is what may be more dangerous because the Russian-Ukrainian war may have a greater impact on inflation figures than the corona pandemic, and the reason lies not in printing the currency as was the case during the corona period, but in the natural resources as oil, natural gas and food and so on. To give you an example, dear viewer, let's take into account the price of a barrel of oil, which rose during a few months of the crisis from $92 to $110, and in some moment it reached nearly $130. So what about the additional cost on the factories that depended on oil and gas in their industry, directly or indirectly? Therefore, it is not surprising that the energy sector has grown very large in the recent period, despite the severe damage that has been inflicted on the rest of the sectors. Dear viewer, we are living in a difficult period in the markets in every sense of the word. Inflation last month was 8%, so what about what will be in this month, and what is hidden is greater, so we say it is true that you should have a cash reserve, especially during crises, so that you can exploit it and deal with it, but do not sell all your investments for fear of the markets going down, for 2 reasons. First, you will not be able to anticipate the reaction of the markets and the economy after the end of the crisis, as it may be followed by a rocketing rise, which means that don't try to time the market. Second, and it is the most important and general reason, that the best way to avoid inflation is to invest, whether in stocks, real estate, gold, and so on. And I am speaking, of course, in the medium and long term, because these investment assets will increase in value with time, even if they lose a large part in some moment. On the contrary, we find cash that almost never recovers its value. Therefore, pay attention to the percentage of cash in your investment portfolio, and if you are an investor in stocks, especially this period, do not invest in companies that will not be able to coexist and cope with crises, especially in financial terms. So you have to analyze the company financially by financial statements. Thus, dear viewer, you have a clearer picture of the state of the markets, their fate, and how to deal with them. I hope you benefited, and if you still have questions, write them in the comments and I will try to answer them as soon as possible. If you liked the episode, do not forget to subscribe, like, and share it with your family and friends. Rashad, the presenter of your program Hit the Road to Fire, was with you. See you soon.